How's it going, everyone? It's Sam. Today we're talking about four different stocks that will benefit if we have to close down the economy again because of the pandemic or because of the pandemic cases, and they'll also benefit if we have to open back up. So, if we have to stay open or if we have to even give less restrictions where people can go and what people can do, these four stocks should do well either way. So, I thought about this when I started to look at Disney stock and I started to think about how there were benefits to both sides if we open up or shut down more. So I wanted to figure out if there's some other stocks that could benefit too. And some of these really aren't affected either way. Some have this kind of dual purpose to them where one side of the business does well if we shut down, the other side does well if we open back up. So I'm going to go through these four different stocks. If you guys like this kind of thing, please leave a thumbs up. Please hit subscribe down there. I really appreciate it. I just went full time on YouTube this week, so every little bit of help helps a lot. Also, if you guys want some free stock with WeBull, I just got some Jpmorgan Chase stock, so a pretty expensive stock. Definitely check out the link down there below. You can check out that link, and if you deposit $100, you get 3 free stocks worth up to $1,600 each. This goes on for a little bit longer, so definitely check out that link. I really appreciate it. It means a lot to the channel. Also, if you want to get in the Patreon, you can join up for our top tier. In that top tier, you can get on small group conference calls with me. So I'll talk to a couple people at a time. We won't let it get too big, but I think it's definitely worth doing, especially if you have some direct questions. It's a lot easier for me to answer questions over a phone call or a Skype call as opposed to just in the comment section. So definitely check that out in the link below. So the first stock on this list is one that I was just talking about, which is Disney. So Disney is a stock that I've liked for a while, and I'm not going to go into the financials on these stocks. This is just for the broad approach. So Disney is a company that is pretty heavy on debt, but they have a couple different parts of their business right now. One is their parks. So even just a year ago, pretty much everyone was looking at their parks for their main moneymaker. That is what they were really concerned about because that's what brought in the majority of their money. So they have their park system, which is a major cash cow. However, they've started to build up their streaming services. Now, they have Disney Plus. They have been trying to grow this to a pretty substantial size, and they have a lot of subscribers already. Last time they came out, they said that they had about 60 million. Now, this is really good for them because it makes them more of a tech company than a brick and mortar, so they are able to scale at a much faster rate. So with this, if we see the economy shut down again, or if we see the number of cases go up, Disney Plus is going to continue to gain subscribers, gain people watching their platform. Disney has come out and said that they want to put more money, more resources into Disney Plus, which can only help it because they don't spend much money now. Now, if we do open up, if there are less restrictions, if the cases go down, then their parks can open up a little bit more. More people will be comfortable going to them. They'll start making more money on that side. So it's kind of this dual approach where either side is good, and it's just a question of what happens. The next stock is one that isn't really affected, that I think is just going to be a good company, and that's Qualcomm. So if you don't know what Qualcomm is, their chips, their microchips, are the ones that go in smartphones, and they are probably most well known for having 5G chips in the new Apple 5G phones. Now, they just signed a 6-year global patent licensing agreement with an additional 2 years that is optional, but that's with Apple. They also have a big contract with Huawei. I don't know how to say that exactly, but they were also given a $2 billion lump sum agreement, and they also signed a multi-year licensing partnership. So they're making the chips for the new 5G phones. I think that that's going to be major because I think a lot of people will move to 5G once they see the capabilities. And I think this is probably one of the biggest upgrades that we will have seen since probably 4G. So years ago when we were able to start watching HD video on our phones, which obviously that's a while ago. So I think that's going to be huge. And I think a lot of people are going to invest in these new iPhones. You can see down here that they expect about $7.22 a share, and that will continue to grow. So I think that's going to be an awesome company to invest in, and I think that there's going to be a lot of growth there after they start selling the new iPhones and once people start being able to test them out. Now, the next company is Jpmorgan Chase, and I realized that I was just talking about them. Again, I got those free stocks from WeBull, and I got Jpmorgan Chase, but I think Jpmorgan Chase is a great company because it is one of the premier banks in America. They have a good balance sheet, they have a good income statement, they pay a nice dividend, but they are a company that could benefit, first of all, if we go into a little bit more of a shutdown, because more people will keep money on deposit with them, more people are saving, more people are probably investing because they have more money sitting around. And I think that a lot of people will use Jpmorgan Chase and they'll be able to continue to gain market share. Their technology is by far better than some of the other banks that I've been around. You can send money in real time to other banks from their actual account, and it's really nice. I mean, I just really like Jpmorgan Chase, but if we go into another shutdown or something like that, more people will hold money on deposit. They'll be able to make more money in that way. If we open back up, more people will be going out and about spending money. They'll be able to get more loans. And I realize that most of what banks make is tied to the interest rate that the Fed sets. So over the next 5 years or so, once everything starts to open up and people feel more comfortable and the Fed starts raising rates again, they'll make it a lot more profitable for banks. So we're looking maybe a couple years down the line and we'll see some nice returns in our bank stocks. So that is something to consider. Now, the last stock on this list is actually McDonald's. So you could lump in a lot of the other fast food restaurants too, but the fast food restaurants are interesting because they did really well during the shutdown because people have less options for food. So a lot of people don't really want to sit down in a restaurant, or they're not allowed to in their state. So they have to go through drive-thrus. McDonald's is no different. So they actually, a lot of these different companies did really well during the pandemic, during the shutdown. Now, if we go through another shutdown, I think that's only going to help them. It will decrease the competition out there, right? So less companies will be able to stay open, honestly. So McDonald's will do better. They'll also get more people through their drive-thrus. But if we open back up, more people will be out and about. Less people will be eating at home. More people will be looking for a quick bite to eat when they're going on trips and stuff like that. So I think that will also help them. I mean, I think if we shut down, that'll be better for them. But either way, I could see it being a benefit for McDonald's and for other fast food companies. Now, let me know your thoughts below. What companies are you looking at that are kind of defensive either way? I think that these companies are all good for that kind of sense. I'm not saying that you should go invest in these companies. I'm not saying that these are necessarily the best value in their respective sectors, but I want to put these on your radar. It's kind of a hedge against either way. If we shut down or if we stay open and decrease regulation and increase how many people can go where in the economy. Now, with the election, you never know what's going to happen, if we're going to shut down more, if we're going to open up more. So I want these to be on your radar. If you guys like this, please leave a thumbs up. Please hit subscribe down below. Let me know your thoughts in the comments, and also check out WeBull and Patreon if you're interested in that. Thank you guys so much. I appreciate it, and I will see you in the next video. Bye.